At its peak, Celsius was one of the largest crypto lending platforms in the world. It held more than $20 billion in customer assets and was widely seen as a safe place to earn yield. What followed became one of the most damaging failures in crypto history. Celsius launched in 2017, led by Alex Mashinsky. The platform marketed itself as an alternative to banks. The pitch was simple. Traditional banks keep profits for themselves, while Celsius would share them with users. Deposit your crypto, lend it out, and earn double-digit returns. For a while, it appeared to work. Celsius grew quickly, and Mashinsky became a constant public presence, hosting weekly live streams and repeatedly assuring users that their funds were safe, liquid, and over-collateralized. Behind the scenes, the reality was very different. Celsius was not earning enough from lending to support the yields it promised. To close the gap, it leaned heavily on its own token, CEL. Users were encouraged to take rewards in CEL in exchange for higher rates. At the same time, Celsius was quietly using customer funds to buy CEL on the open market to prop up its price. As market conditions tightened in late 2021, pressure increased. Regulators in multiple US states warned that Celsius's yield products looked like unregistered securities. Internally, risk increased as the firm moved into unsecured loans and aggressive DeFi strategies. Then came 2022. The collapse of Terra and its stablecoin wiped tens of billions from the crypto market. Celsius had significant exposure to high-risk yield strategies connected to that ecosystem. While it avoided the immediate implosion, confidence in the platform disappeared almost overnight. Users rushed to withdraw their funds. Celsius couldn't meet the demand. Most customer assets were locked in long-term loans, DeFi positions, or illiquid strategies. On June 12, 2022, Celsius halted withdrawals entirely, citing extreme market conditions. 1 month later, it filed for bankruptcy. Court documents revealed the full scale of the damage. Celsius had a massive hole in its balance sheet, owing billions more than it could repay. Investigators described the operation as Ponzi-like, concluding that new deposits were often used to pay earlier users. It also emerged that Mashinsky had personally sold tens of millions of dollars worth of CEL, while publicly promoting the token and reassuring customers. In 2023, Mashinsky was arrested on fraud and market manipulation charges. In 2025, he was sentenced to 12 years in prison and ordered to forfeit tens of millions in illicit gains. Celsius eventually exited bankruptcy with a plan to partially repay users, including cash distributions and shares in a newly formed Bitcoin mining company. The lesson was brutal but clear. High yields come with high risk, and when you hand over custody of your crypto, you're trusting the system behind the promise, not just the numbers on the screen. Celsius didn't fail because crypto failed. It failed because trust was abused. Thanks for watching. If you've got questions or thoughts, drop them in the comments. We're happy to reply. At Mudley Group, we're building a space where anyone can learn trading, improve together, and feel supported, whether you're brand new or already trading. Follow the channel, like the video, and check the description for useful links. See you in the next one.